Hello, and welcome to Preferred Return. So this is a podcast about private equity and venture capital, or to be more specific, about the role of technology within private equity and venture capital firms. My name is Kale. I head up revenue and go-to-market for Alvia, and I am joined by Jeff Williams, aka Dubs, who is our SVP of Industry Solutions and Strategy. You want to say what's up, Dubs?
How we doing, y'all?
All right, so our hope is to bring together the best and brightest across the entire industry and have them share some of the best practices, some of the trends they're seeing, and how firms are using technology to gain an edge in the market. Am I missing anything, Dubs?
I want to say that I'm going to be making all of the podcast music, and I hope you dig it.
Yes, we should be honest. This is ultimately about your life and career as a rock and roller, so please expect some fresh tunes with each episode. Should we get on with the show?
Let's get after it.
No doubt. Giddy up.
Hello, everyone. It's Jeff Williams for Preferred Return. This week, we're going to get started off here with our very own revenue leader, Kale Skullerud, who has just recently joined us and who has tremendous insights, not only into what people in the market are talking about, what they're up to with technology, but has some amazing experience as well that I think at least translates very well to what people are trying to do in this market with technology. So let's get started. So I do want to have you provide a little bit of background. You're new to the company, just joined us it was June, maybe July, and have some background obviously in this market. Tell us a little bit about yourself, where you've been in your career, what brought you here, and tell us something about what you enjoy about music, a magical moment you've had, favorite song, favorite artist.
Yes. So, my gosh. So I've been in tech for 10 years, I guess now, and always in a sales and marketing function. So often referred to as go-to-market nowadays, or revenue. And most of my career was spent in New York City. And I was working for ADP, which was a big kind of OG enterprise tech company. I think they slowly started to embrace that they were indeed a tech company. They, I guess, for good or worse, better or worse, so to speak, they were in payroll, which started as kind of an outsourced motion. It was more of like an outsourced business process outsourcing type motion, but eventually they came on to adopt the fact that they were a tech business. And then early days, I started a community called Scaling NYC, which was built for, a networking kind of curated network thought leadership forum for executives at rapid growth businesses. So in New York, this is when a lot of growth stage businesses were starting to land there. So think Spotify, Bonobos, Warby Parker, groups like that. And so I found that my circle was becoming mostly anchored around like Series A, Series B businesses that were scaling rapidly. And so I was building a sales team, a sales organization within ADP in their New York City office. And we were employing, I guess what you could say, very modern tactics. Like we were kind of building a tech stack on the side. So I somehow got a reputation for building a modern sales organization. And off the back of that and Scaling NYC, I found some consulting opportunities find their way to me. So I stepped out and I started my own consulting firm called Scaling Ventures, where I was building the sales machine, so to speak, for, again, Series A businesses that had strong product market fit, but hadn't really built a repeatable sales process. I was also a mercenary for hire, if you want to say that, at Scaled, which is a consulting firm ran by Jake Dunlap, who's very much a thought leader in SaaS go-to-market. And I've always been kind of obsessed with the go-to-market motion. I've always said that it's kind of like turning art into pop, where you have to take something that's malleable and creates or articulates value in some kind of way and then map it to a market and try to thread the needle. And I like to think that that's kind of my calling is, turning art into pop. I know it's a little weird and abstract, but so that's that. And I was doing business school at night. And then when that wrapped up, I stepped into a VP of sales role at Harry, which is a workforce technology company, and they provide software for mostly hospitality restaurants. And at that point, we were raising a Series A, and I had reached out to Bow River Capital and was hoping to get them involved in the financing. And because of a conflict of interest, they had a big holding in one of our competitors, or one of Harry's competitors, rather. They were unable to participate in that round. But I made the connection with the Bow River camp, and then they're a buyout shop. They have a SaaS fund, and I was actually home. I was born and raised in Denver, so I came home to quarantine when things got a little sketchy on the COVID front in Manhattan back in March, and I had an opportunity to sit down with the Bow River camp and just have coffee and kind of put a name to the face. And they had mentioned that they just parked a big investment in a CRM business that was vertically focused, and that was really kind of all I got. And that they needed a CRO, and they wanted me for the job. So I stepped in, and I've always, I've lived in CRMs my entire life as a sales pro. And if you ask me, that category has gone rather uninterrupted. Salesforce has always kind of been the only game in town. And as software kind of evolves and matures, you start to notice that horizontal SaaS plays, which is what Salesforce was, which was a CRM for all industries, all use cases. The vertical players start to come in and pick away market share. So I've always seen kind of the verticalization, if you will, as an exciting opportunity. And CRM is something that was ripe for disruption. And then I started to understand that Albia was playing in the private equity venture capital space. And I've always been enamored by that. I used to work closely with VCs. When I was a consultant, they would park a Series A, and the first order of business was to install an executive team or install and build a repeatable sales motion. So that's where a lot of my exposure to that audience happened. And I always thought they were super bright. They always had answers to questions I didn't even know to ask. So I figured it was an interesting opportunity. And that was even before I met you, Dubs. And then I was hook, line, sinker on Albia, man. That's all I needed.
Okay, so something
musical moment. Did I miss that part?
Oh, you did. Yes. Tell us a magical musical moment. Could have been first concert. It sounds like you maybe have something right off the top of your head.
Yeah. So interestingly, what brought me to New York City, I was a senior at Gettysburg College. I went out east to play lacrosse in college, landed at Gettysburg in PA.
Story, and it is a good story. Carry on.
Yes. And gosh, I guess what's interesting when you're a Denver boy is you don't realize that a concert venue like Red Rocks ingrains something in your soul. You maybe take it for granted, but concerts were a part of life. And definitely my happy spot is live music at Red Rocks under Starry Night. And so I'd always been a huge music fan. My brother, too. We'd always get each other CDs and stuff like that. And came time to get a job. And in the spring, I couldn't go back to Denver because we were in season for lacrosse. And so I would stay with my buddy Tommy Barnett, and his dad, Steve, was the co-chair at Columbia Records. So interestingly, he kind of surfaced an opportunity to go be an intern in their Big Red program, which I didn't know, but was a very, very prestigious program. So I'm like the total cliche, packed 2 suitcases full of all my stuff with a one-way ticket to New York and not enough money to get back. Split like a 200 square foot room in Gramercy with my buddy Max, and a lot of peanut butter, a lot of ramen noodles. But my first, I would say, music as a moment was me being the totally cliche record label intern for a summer, and it was one of the greatest summers of all time. But I think music is probably one of the most near and dear things in my heart.
Well, and you've told me, you've elaborated on the story a little bit. You happened to walk in on Adele in a conversation in the building, and you were trying to figure out where it was coming from, and it happened it was Adele in a conference room. And so anything you want to add about that? I mean, it's pretty incredible. Not many of us walk into
yes.
conversations that Adele is having, but it had to be pretty magical, like summing up kind of the path you had taken to get there. In that moment, all of a sudden, it probably was very real.
For sure. Yeah. And, 3-6 Mafia would walk down the hallway, and let's just say you could smell the smells from every room in the office. And gosh, I had a chance to hang out with MGMT. I hung out with John Mayer, went to a J. Cole album drop, went to a Roots album drop. So that was a fun summer, man. Ooh. Didn't save much money. Didn't make much money either, but it was
priceless. The experiences are priceless. And here you are. You get to tell them on the podcast. Okay, so interesting history you've got. Very go-to-market focused. In your head, you're thinking about the verticalization of CRM as a category. You've worked with many software businesses, and you mentioned something, bringing a modern kind of way of thought. And so for the listeners that aren't privy to this information, since Cale joined us in, I think it was June of 2020, we've only gone on to set records for revenue attainment, if you will, company records. And so whatever you brought with you seems to be working. I want to talk because I know enough about the things I'm going to ask you here that I want to kind of carve this out for a minute. Your experience with kind of modern, you put it as modern kind of sales tactics. We're going to carve this out. We're going to bring it back here in a minute. But I want to jump in and talk a little bit about, you and I work on a daily basis. We work quite a bit together. We're often on many calls, but I'd love to hear from you. What are some of the things that, you're hearing? What are some of the things that sales reps on the team are talking about? I mean, if we use this episode of the podcast to basically summarize sort of where private capital markets are in terms of technology, how would you answer that? How would you describe it?
Yeah, that's a very good question. Well, gosh, I think when everybody looks at private equity or venture capital, they think of this like this super elite, very sophisticated, very guarded industry that's kind of the masters of the universe, so to speak, sitting in an ivory tower, just seeing the future and making bets. And it's something that the kind of common person doesn't really have much access to. And so with that, you tend to think that those industries are super progressive and they're using technology that, might not be very common. And so I think the thing that firstly was kind of shocking to me is just where the industry is at large on a tech adoption curve, if you want to say that. Because I think also if you bucket private equity with like financial services, you start to think about like these high frequency trading hedge funds or these quant shops that really are using some of the most progressive technology available, using machine learning, AI, cool stuff like that.
Physically co-locating as close to exchanges as they possibly can for trades, all these. Yep.
Crazy stuff, right? Like literally where the edge is, an extra foot closer to the exchange where your data server is, right? So I guess if I had to summarize, I would say that it's kind of an old guard still that's holding the decision making. And so you step in a lot of these firms. There's a good quote from another dude who runs a podcast, and he says that, in a lot of his conversations, you talk to a firm and the most valuable technology they have is Office 365, and that it's been that way for years. So I would say, a lot of the conversations we have with firms, it's that they're kind of now stepping into a more kind of modern outlook on what a tech stack is. And even the term and the vernacular of tech stack is kind of now emerging in the industry. And they're understanding, okay, where can technology play a role? Where can we create leverage that way? How can we use data to make better decisions? How can we get visibility across the team so that their activities are coordinated, stuff like that? Just a single consolidated system of record, right? Like what's the source of truth for the firm, whether it's the people we're talking to, the deals we've invested in, the deals that are in our pipeline. So, I think right now it's an exciting time in the industry, especially in the context of COVID, where, it's been the great accelerant for tech adoption. So it's a cool time to kind of witness, because you have some firms that are just now stepping into a place where they have things like a CRM. And then you have other firms who are thinking about how they can run ML on their data sets and start to get predictive with the deals they're sourcing, or, the return they might see from a portfolio, something like that.
Right. So I want to go back to something you said, which is, it's a very sophisticated industry, no question. Great deal of, I'm a fanboy. I've often felt the need to defend this industry on things like sort of the disproportionate number of new jobs that are created in venture capital, for example, where I spent the early part of my career. And so certainly I think, there's a lot about sort of the mainstream understanding of the market, which is, kind of mostly just misunderstood or doesn't understand much at all and doesn't pretend to. But certainly you think, okay, well, the sophistication level is high. There's got to be this amazing, these amazing algorithms. And, for what it's worth, there are some of those out there. But you come in, you see it, and it turns out these are humans after all, right? I mean, very smart ones, very incredibly intelligent human beings, and very sophisticated kind of ways of thinking about, kind of investment opportunities and how to build companies and all sorts of different strategies. But turns out they're they're people after all, and much of the technology that they're using isn't too terribly sophisticated. It's easy to get caught up in sort of what the market's doing in the sort of sophisticated strategies, and it's easy to forget that at the end of the day, there are kind of two fundamental pipelines, right? There is a pipeline through which capital is raised, right? You go out and raise your private equity funds. And then there's a pipeline of investment candidates, targets, opportunities, however you want to frame those. But, the universe is sort of your oyster, if you will, and it's a matter of kind of finding the ones that you think you can add value to and create returns for your investors. Am I making it all that much more difficult than that? I mean, is it that simple? Like, I'm asking this of someone who's spent their career, kind of looking at sales funnels and how technology applies to that. Is that dramatically oversimplified?
No, I mean, I think it's spot on, because if you think about kind of the traditional pillars of a tech stack, it usually boils down to three very simple things, right? It's how you manage your books, which translates into an ERP or an accounting software. Think Oracle, think NetSuite, think QuickBooks even. And then you got to figure out how you manage your people, which is a simple thing like an HR technology, back to my days at ADP. And then you think about how you manage your customers, which is usually a function of a CRM. So no matter what business you're in, you got to figure out how you're going to manage your books, how you're going to manage your people, and how you're going to manage your customers. And then beyond that, it's just kind of different flavors for the category. To your point, what makes it so interesting in a private equity venture capital context is most of what they do lends itself very well, translates very well to a CRM, because it's about taking a segment of some audience, some market, whether that's an investor or an institutional LP or something like that, targeting those audiences, communicating with them, building interest, building engagement, and then moving them into a pipeline, and then having a kind of standardized process to work those things through a pipeline into the outcome that you want. So whether it's an investor at the end of the machine or a deal at the end of the machine, and you're deploying capital into an asset, whether it's a private company or a big real estate property, something like that, it's really just CRM mechanics, right? Mm-hmm. So I think that's really where it's been interesting from the perspective of Alvia, because we think a lot, or firms think a lot, I should say, about how technology can play a role in the firm, where leverage can be had with technology, and a lot of it translates into things that most people would just tag or identify in the CRM bucket.
Yeah. So certainly there's a fair amount of kind of special sauce that goes into the sort of how to kind of look at an investment, what have you. But the basic kind of translation is pretty CRM-y. It's pretty pipeline. What I'm trying to do is build a cliffhanger here for how some of your history of kind of applying modern tech solutions, modern tech stacks to kind of the fundamentals of a sales pipeline comes into play here. Tell us a little bit about you've been with the company now. By the way, that the cliffhanger means we're going to keep building this up, and we're going to get to it.
Means we haven't gotten there yet,
right? Tell us a little bit about kind of what's going on in this market. What are people up to? I mean, help the listener understand. Hopefully, there's all sorts of listeners here, but many hopefully are private equity firms themselves and wondering about sort of where they rank. What are we talking about out there? I mean, it's a pretty straightforward kind of the way we framed it here. Are people kind of all over this? Are they bringing these super sophisticated things, or are many of them sort of still kind of looking to first kind of get into this category CRM and really start to kind of find some leverage in technology where there hasn't been some historically? Tell us a little bit about what you've seen from the people you've talked to.
Yeah, for sure. So there's Dylan Dempsey, who heads up our growth team at Altvia. He's kind of a student of technology, I guess you could say. And so we think a lot about just the themes in terms of where technology is in society right now in our lifetime and what we have access to. And he shared a quote with me, which is from a gentleman named Jay Krebs, who's the CEO of Confluent. And it goes something like this: it isn't just that businesses use more software, but that increasingly a business is defined in software. That is, the core processes a business executes, from how it produces a product to how it interacts with customers to how it delivers services, are increasingly specified, monitored, and executed in software. So the simpler version of this is that all companies are becoming tech companies, right? Or as Mark Andreessen very famously coined it, software is eating the world. So I think, if I were to just say where the industry is, I think that there's this kind of growing awareness, or perhaps there's kind of a new era beginning where they're understanding that everything they do in terms of core processes, in terms of their investors, the deals, right? That everything is kind of defined in software. And as a byproduct of that, it's defined in data, automation, those types of things. So, generally speaking, I think that would be my answer, is that firms are starting to understand, okay, whatever our secret sauce is, it's going to inevitably be wrapped in technology. And the more efficient we are and the more effective we are at wrapping technology around whatever it is that makes us differentiated as a firm, the better we'll be able to define it, the better we'll be able to repeat it, and perhaps get to a place where, they're not looking at the deals that they think should be interesting. They have ML models telling them the deals that should be interesting based on the performance of the deals in their portfolio. Or conversely, or I guess kind of in a separate vein, is, when they're thinking about fundraising, they'll look into their current base of LPs and understand the attributes that make those LPs unique and whatever's common among them. And then they'll use those features, if you will, to target LPs and just be much more effective with their time. So it's basically like, hey, you have 10 friends. We ran some analysis. It turns out they all wear leather jackets and ride motorcycles. So if you want more friends, you should go look for people wearing leather jackets, riding motorcycles, right? It's kind of that simple. So
bring your bike, ride your bike.
What's that?
Ride your bike too. Yeah,
that's it. And you can broaden your biker gang. But then, I think very simply, right, there's kind of like a walk, crawl, run thing happening. And the walk is definitely translates well to a CRM, where it's like, hey, we need a system of record, or a source of truth, as many have said, where it's like, hey, we've got contacts living in a bunch of spreadsheets and a bunch of Outlook inboxes on LinkedIn, connections and stuff like that. We need to pull that stuff together so that we have something centralized for the entire firm to take advantage of, because so much of it's a network game, right? It's a relationship basis, or it's just something where you have to be able to understand the connections among your reality, because you can get more value out of those relationships that way. But I think, CRM is kind of if you want to just think about data management, it's like the first really productive step. It's like, let's pull everything together into a centralized place, and then we can organize it and get it neat and kind of index it. And then from there, you can start to take advantage of automation. So just, hey, we've got our network, for instance, is now in one database. Okay, cool. Now we can start to take advantage of automation. Let's send an email to all the investors or all the management teams that fit this criteria. And instead of sending one-off emails, you can send, 100 emails at the same time with some level of customization. And that puts time back in your day. And then if you have a feedback loop happening, you can see who's opening your emails, who's clicking on the links, and that can inform a sense of priority in terms of who you follow up with. So you're kind of using those activities to build engagement, and then you measure engagement to inform, a sense of priority or how you follow up. So it's just leverage, right? It's time back in your day. And I would say if the crawl stage is kind of that CRM oriented thing where it's about data and getting organized and indexing the data such that it's useful. A CRM is also kind of constantly harvesting data. Every interaction you have, you can enrich it with third-party sources. So you've got PitchBook, Preqin, you've got Crunchbase, all that kind of stuff, LinkedIn even. Now you have these huge data sets. They aren't very useful if you can't make decisions quickly. So the next piece that gets really interesting is like an analytics layer. So being able to visualize those data points and be able to kind of quickly comprehend that information, that's definitely the walk. And then the run in our category is being able to serve all that stuff up, whether it's an LP portal or a data room where you can start to have the visual analytics tell the story for you. And it's much more engaging, if an investor can step in and slice and dice the data however they want, that by definition is kind of driving engagement because they're interacting with that stuff.
Yeah. Well, and, for history's sake, I spent 5 years early in my career at a venture capital fund of funds. And the reality is, we went gangbusters during the time that I was there. Tremendous growth, several multiples over in terms of assets under management. And so I think it certainly felt like we were kind of always fundraising. But one of the things that I still remain very passionate about is the idea that people's lives could be made so much easier by kind of consolidating all of the information that they have into a single place. And oftentimes it's the temptation is to sort of just kind of, we just need to respond to one of these requests, but really if you took the time to kind of consolidate the information, then the thesis is that you're then able to kind of respond much more quickly, much more strategically, not only save yourself some time in how long it takes you to kind of respond to questions that LPs are asking about intra-cycle, right, where you're not raising capital like at an annual meeting, but then also here comes fundraise, here comes all of these data requests, and man, wouldn't it be amazing if we could kind of consolidate these things. And then what a thought that you had there, which is, what if you actually kind of proactively just put that information out there for people and shared it with them directly. So we're working with some of the premier brands in all of this market. We're extremely proud to have the customers that we do, and we thank them tremendously for their loyalty and their partnership. And yet here we are, we're sort of just getting started really with kind of this sort of more modern approach where people are starting to think about going on the offensive, right? I would describe, in some cases, my experience is sort of defensive, right? Like, scrambling to kind of find where to get that. But it turns out that, it's a pretty interesting concept. What are we hearing? I mean, what are people how are they reacting when they see that you can actually get all the way through organizing all this information in your internal operations, taking information to sort of enrich that and sort of aggregate, kind of third-party information. You mentioned many of the common sources. Have it all there. Maybe, even systems that aren't CRM. You mentioned kind of keeping your books, right? That's a pretty important part of the equation here in private equity performance data. And then sort of making it available for a self-service thing. I mean, what do you think that many firms are thinking about when we're showing them that for the first time, maybe that they're seeing it?
Yeah, no, that's a very good question. Well, back to the topic of like, at the end of the day, we're all consumers as individuals, right? And a lot of B2C technology kind of sets our expectations. And so if I go back to the beginning of my career, when it was like proper enterprise tech, man, you should have seen some of those applications, right? It was painful because they didn't, they weren't selling to the end user. They were selling to executives who wanted visibility, right? CRMs were super valuable back in the day because executives could get revenue forecasts, right? Or they could understand what their installed base was worth. They could understand what churn risk looked like, stuff like that.
So it's sort of a management decision. Like, hey, we're going to sort of put this, our sales reps through what I would argue is sort of software abuse.
Torture, yes.
The sales reps didn't have a say in it. It was really kind of management driven.
Yeah, absolutely. So there's this notion that like all of a sudden technology had to be beautiful and usable because as consumers, it was beautiful and usable, right? You step into a Facebook page, everything's intuitive because, at that point they were kind of pioneering user interface and user experience and, building things that were so intuitive that they didn't really need training, and adoption just kind of happened naturally.
And some documentaries out there would argue that they were building them to be addictive.
Yeah, right. So it's so easy that you can't stop, right? And so, I think when you log into, a Fidelity dashboard or a Charles Schwab dashboard, or you look at a portfolio of stocks as an investor, you can access that on your phone. You have real-time visibility into the performance of all those investments. You can take action in real time, all those things. So that's what's anchoring expectations. So if you step into a private equity setting, which is much more opaque, we're talking about 10-year holding periods and things like that, where traditionally it's like you might get an update on a quarterly basis. That doesn't really suffice anymore because, as consumers, we've been conditioned to get access in real time, to have access to these kind of interactive, on-demand, self-service type of experiences, if you will. So, I think the reaction that we get most times is like, "Oh, thank God," or like, "Yes, this makes so much sense. Like, this is how everything else is." And that's cool because you can kind of sense that, if nothing else, we're bringing the category into a place where it's table stakes with the way that we're consuming other technology and things like that. I don't know if that answers your question.
It does. And I'll add too. I mean, do you think, I get the sense sometimes that people also feel a little uncomfortable.
Yeah.
When they
for sure.
Things like this, right?
Yeah, definitely. And I think because the industry is notoriously opaque, right? We're talking about private companies, right? They're not public. They're not disclosing financials, things like that. And the other thing is they've got 10 years to generate a return, right? So on average, right? So it's like, okay, we don't want to show you quarterly updates because, hell, we had a real tough quarter in the portfolio, right? And we're not seeing the performance that we want. So maybe we're going to hang tight on some of this information and wait till we've got better news to share. But that's just friction. I think things resolve at a place where they're going to get that information, or they're going to move to places where they can get it on demand. So I think we're starting to see transparency as something that investors expect. And as a natural kind of byproduct of that, they're gravitating towards the GPs and the fund managers that provide that kind of visibility and that kind of transparency. And the further they let them in, what is kind of an interesting byproduct of that is it makes the investor more loyal. Mm-hmm. Right. So we're seeing, look under the hood anytime you want, and good, bad, or indifferent, LPs are, attracted to that, and it's resonating with them. It's drawing them closer.
Yeah. You mentioned something in there. I mean, there's, if you kind of read stuff I've written or thoughts I've provided, I haven't shied away from kind of taking on this idea of FOMO, because it's okay, right? I mean, I think we all have FOMO, frankly, and that's okay. I think that there's a little bit of sort of getting anxious a little bit when people see what other people might be doing. And, I guess it may not be sort of technically correct to say FOMO, right? Because, it's almost the feeling.
Investments are liquid.
Yeah, right.
It's like, well, we have it now.
Yeah, exactly. But, I mean, it's sort of like, well, I don't want to do that, but I don't want my, competitors doing it. And I've bumped up against this question now for a good 5 or 6 years. And, I think that's important to say, like, hey, like, this is one of the most competitive markets in the world, right? The things that people will do to find and create value are incredible. And I wish that more people could really see, kind of what that's like, and the DNA of this industry. It's incredible. But, somebody's going to find their way to it. And here's the thing I always kind of, say to people is, like, we're also not sharing information that you haven't already shared, right? And that the combination of those two things is pretty incredible, that there's this fear that, sort of other people might be, kind of doing this and you're not, right? Mr. Firm. But, you are doing it, right? I mean, you're sort of already sharing this information. It's just in a really poor kind of user experience or investor experience, as you had sort of implied there. And that one kind of still leaves me scratching my head, but you certainly see those firms that are, all sorts of firms at this point, right? Like, some are kind of leading Silicon Valley venture firms, right? That don't really need to sort of differentiate themselves or create this experience. They sort of announce that they're raising capital, and it's pretty much done. That you see them sort of light bulb go off as an opportunity. Hey, we're going to, get ahead of this, and we're going to show that, kind of we lead. And then on the other side of the spectrum, you see, firms that might be having a more difficult time raising capital right now, or telling a story, and are leading with this idea of, hey, this is sort of the way we do business. This is the partnership. We're getting married here for 10 to 15 years, this is what it's going to be like to be married to us. And let me use this information to tell you a story about why we should get married.
100%. And that's just kind of back to the conversation, right? When you talk to a GP, and we're really starting to see kind of two like profiles, right, emerge, where one GP is like, hey, here's our investment thesis. We invest in, I'll share an example that's very close to the heart, right? Like we were investing in software growth companies that have between $5 and $10 million in ARR, annual recurring revenue. So think, subscription revenue from the software that they provide as a service. And they operate in coastal America, right? That's kind of one profile. And now we're starting to see groups who are much more data driven, quote unquote modern. And if you ask them to describe their investment thesis, they'll get so much more granular because they're harvesting the data points that allow them to speak more intelligently about their investment thesis or about their portfolio, where it's, we're selling to software companies that have, or we're looking to acquire software companies that have this in ARR, their average contract values are at this, their churn rates are between this and this. We see growth potential because their average contract value has only moved up a step function to, it just gets so much more granular, and they can demonstrate it visually. So they have the data and they can prove it, right? Like they can actually prove it. Whereas a lot of times it's like, oh, like our edge is we've got proprietary deal flow, which is from an investment banker who is also giving these deals to every other single firm, right? And so I always joke that, in many instances, the edge is getting invited to a flea market that's totally jam-packed, and you just pray to God you don't reach for the same watermelon, because then an auction ensues and the whole industry, they can't overpay for an asset, or the ability to generate a return goes out the window. So mostly on the deal side, it's about quick access to the right deals and having a playbook. And I guess this is kind of another kind of offshoot that dovetails from the original topic too, is, proving how repeatable an investment thesis is. So it's like, hey, we invested in 5 software companies. One is just absolutely off to the races, smoking it. The other 4 are doing okay, but we have no idea what makes that one company unique, right? So, and if these firms that are taking a more data-driven approach, they're very specific about it. They understand what's generating the returns and the growth, and they can use that information to be more dangerous when they go and source new deals, right? They know the leather jacket and the bike part, right? Mm-hmm. So they go out and they find them, and it lends very neat to articulating to an investor, like, no, we didn't get lucky with that 1 out of 5 company that totally smashed it. We understand it very clearly, and we're going to continue to double down, and here's how. Because that's when the really outperforming funds start to differentiate themselves.
Right. Wow. I think it just all came together for me. Let me see if I can recite the thought I just had, and you can confirm this. And then basically we can just, publish this episode of the podcast, and, we're done. It's fit. Everybody's off to the races with the secret weapon. But you mentioned the analogy of the bikers, right? And so it was sort of like earlier when we were talking about this, you talked about how, the implied example was that if you could only understand that, your best customers are, bikers with leather jackets, then you would know to go looking for, bikers with leather jackets. And then you just said that we could actually tell a story about how we're sort of dominating, the upper quartile with our returns, because we're able to consistently find bikers with leather jackets. And you mentioned that last part in the context of like, telling a story, right? Like telling your investors a story. You tell it during fundraising, and then you go do it, and then you tell them, what you've been doing again. Is that all at the end of the day just the same data? I mean, kind of sounds like it might be.
Yeah, no, for sure. And that's right. Because a lot of our work too is helping firms just better understand their portfolio when they're thinking about follow-on investments, let alone targeting new companies. And that's why I guess a lot of leading firms, the role of CTO isn't very prominent in private equity and venture capital, right? It's kind of nascent in that sense. So it's rare that somebody at the firm has kind of a vision for technology. And we see a lot that the firm life cycle is kind of like a framework that is informing a lot of the strategic kind of technology decisions or just thought process around, what are the key workflows? What are the key activities? What are the key data points that are prominent in a venture capital private equity firm? And a lot of groups use the fund life cycle, I should say, to inform that thinking. So it's like, all right, we engage investors, we raise money. We're probably using data that maps to a track record to do that. Hey, here's how we're going to grow your capital. We've done it before. The more data-driven that conversation is, the more provable it is, the easier the storytelling is. And then when you're going to deploy capital, guess what story you're telling the management teams? Here's our track record. Here's our playbook for value creation. We're not just going to write a check and high five you and see you in a couple quarters.
And presumably you're talking to the kind of company that the data suggests is the type of company you have success with.
Yeah, exactly. It's like, by the way, we invest in companies like this, and we've demonstrated an ability to increase the value in these businesses. And this should look and sound very familiar because we're sitting here talking to you, right? Our intention is to do what we've done. And then after you've deployed the capital, they run their playbook. They, create value in the portfolio, however they do. And they bring that exact same narrative back to the investors. Because guess what? We're raising our second fund. We're raising our third fund. We just did what we said we were going to do, and we're going to do it some more. So, give us capital. And to your point, it's the same story. It's old wine, new bottles. So the more data-oriented those stories are, the more believable they are, and the more that the stories kind of tell themselves. And I guess the only thing to mention there, too, is we're seeing a lot of firms index towards attaching measurement instruments, if you will, and harvesting data around the elements that they think differentiate themselves as a firm, which usually has to do something with how they interact and target investors, and then how they deploy capital and do deals. So, again, all kind of stuff that interestingly maps to a CRM. So that's another piece too, where it's like, all right, we've got the firm life cycle. That's what we're going to use to figure out where technology can play in our world. And we're going to use our points of differentiation to decide, what buckets we prioritize, and we invest in technology and where we think we're going to get ROI. And those are the two things that I think, just to speak generally about what we're seeing in the market, that's, leading to the best outcomes. The firms that are kind of sticking to those two North Star, so to speak, are doing the best in my view.
Yeah. Yeah. And you mentioned, what sort of gives a firm an edge, and you talked about how they raise capital, how they deploy it. Certainly a very important kind of element of technology inside any private equity firm is, kind of the bookkeeping, as you had put it earlier. And that's a market that we don't play in. We actually don't believe that that's, our space to be in. There are some well-respected vendors that have been around for a long time doing that and doing it well, presumably, given their lifespan. A lot of, things that I happen to know, about that category that, a lot of people spend a lot of time getting, implementations of software and, kind of finance or accounting set up because it's important and there's a lot of nuance in it. But at the end of the day, how you sort of keep those books is certainly not the element that distinguishes you, right? I mean, you're really keeping the books because you're actually raising capital. You have to keep the books, and you're going out and deploying it, and you have to kind of keep track of this stuff. That's information, though, that we can use to then kind of tell this story, right? So it's that's sort of what you were suggesting, is that you don't differentiate on the sort of accounting solution in this market. At least that's not what we're seeing. You're really kind of taking that information and using it to tell a story about how you differentiate it, or to use tactics that actually differentiate you, in which you may not be, talking as much about in terms of which LPs you're targeting. Yep. But nonetheless, it's information that you take with you. And that is presumably sort of, what we're talking about with this firm lifecycle is you raise capital, you deploy it, you kind of keep track of it, you monitor it, you measure it, and you tell LPs about it. And then when it comes back around, all of a sudden you're fundraising again. That's also the same information that you're going to be heavily accessing. And so what we're trying to do is bring that picture together, so that it can be useful in the sort of lanes where the kind of magic is actually happening and where firms are differentiated. That accurate?
Yeah, for sure. You can just, like, gosh, back in like my HR tech days, right? It was like, you just can't get it wrong, right? If payroll's wrong, everybody freaks out. But in terms of returns, like you just get a pat on the back for doing it right, but you're not going to create any incremental advantage by being the best payroll processor on the planet, right? It just has to get done. And so you can think the same about, accounting software and HR tech, right? In the same vein, if we're going to bring it back to kind of the pillars of enterprise tech, where, not only is it diminishing returns for execution on the accounting front, the returns fall off a cliff, right? Where you're not creating returns for your investors because you incrementally are executing accounting workflows 5% better than the next firm. If you can incrementally execute fundraising and, capital deployment workflows 5% better, now we're talking, right? And so that's just by definition, there has to be, an edge there, and then it should be prioritized such that, that's what's generating outside returns, especially as the market becomes more competitive, right? I mean, there's a new firm entering the mix every day, right? So you got to make sure that you're not focusing on stuff that not only has diminishing returns, but has no incremental return from more focus and better execution.
Yeah. So at this point, does any of this, I mean, you said a few things that I think sort of relate to what you've seen career-wise in your own career, applying modern technology to sales organizations, go-to-market organizations. I mean, I have to think, and I know the answer. I know the answer. I have to think you're interested in understanding where your effort's going, what information is going towards those efforts, measuring it, and then, getting everybody pointed in sort of the direction that's working most.
100%.
It sounds like this is all actually
the same
similar,
thing,
right? I mean, we're talking about private equity funds and investment returns and accounting and all these things. You have to sort of slow down and digest, kind of all of the things in this picture. But at the end of the day, it's about having the information, that you need. We really kind of frame that as like accounting. That's stuff you have to have. I think it was great the way you put it. You can't mess that up. But then, taking that information, putting it in the places where, in this case, in this market, where you have, sort of a sales motion, right? Like, hey, we are raising capital. Here's the information that is going to lead us to the people that we've historically been most successful raising capital from. Here's the story that we tell. And then we measure that to see if that is effective. I mean, it sounds to me quite a bit like it's the same thing.
Yes, it's the exact same thing. Only, at the end of our machine is private equity and venture capital firms that we're trying to sell software to. At the end of Amazon's machine, right, is every consumer ever, right? So, they're harvesting data nonstop about everything you've purchased, about everything that's in your shopping cart that you forgot to check out, about the stuff that your wife orders, the stuff that your kids order, ultimately so they can predictively serve up more of the products that you're more likely to buy. So it's the same methods. It's the same kind of meta thought process. And at the end of the day, if you want to just boil it down to what's very simple, it's about having good, clean, well-organized data, taking advantage of as much automation as you can, and then having some kind of feedback loop so you understand how that stuff's landing, so you can learn from it. You can see the patterns to inform, activities in terms of how you follow up with investors, right? You send 100 emails to potential LPs. The traditional method was to send them one at a time and then pick up the phone and call one at a time and get through your 100 phone calls. Whereas today it might be send 100 out and then see, the 15 that clicked on all the links and give them a call first, because the thought process is they're the most engaged. And then perhaps you can start to understand what it is about those 15 people that were the most engaged. So that next, subset of 100 emails you're sending to people who look exactly like that. Now we're talking about operating leverage, right? Because it's giving you kind of a relentless sense of priority, and you're only spending time on high probability, high value, conversions, if you want to sassify it.
I think I'm actually going to go start a private equity firm. I mean, this sounds like it's pretty straightforward.
How hard can it be, right?
Yeah. Where do I start? I mean, do I just like immediately just like, we've talked about this sort of life cycle, this circle a little bit. Is it circular? Like, do I just jump in somewhere and the rest kind of comes? I mean, where do I start if I want to get into this? Sounded a lot to me like a CRM.
Yeah. I mean, it's hard to strip away my bias here, but that's, what is it? Your network is your net worth, right? So I think you have to understand what your world entails in terms of the relationships that you have available to you, whether that's CEOs and management teams or high net worth people in capital. You got to get your arms around that first and understand, the characteristics of those management teams, the characteristics of those investors, and how you're communicating with them and how engaged they are with you and what gets them excited and the stuff they've invested in before, the VCs, the PE firms that they've interacted with and what got them jazzed about that. So, it really does start with a CRM, or just, some way to manage your network, manage your relationships, because that's usually key to the secret sauce, no matter how you think about it.
Yeah. I'm not the most organized person, so that sounds helpful. I think that would be helpful to me. And then you were saying that, I guess at a point, kind of the workflow that I'm going through there and stuff, like I actually do start to have the ability to kind of start to measure, like, oh, here's what's working, here's what's not. So it's my hope that I end up raising this fund entirely from bikers with leather vests, because that would be one of those cool things that nobody thought you could do. And then I would take great pride in having done. But even if it's not bikers and leather vests, presumably I do start to develop the patterns that then kind of help me find my edge, and I'm off and running with it.
If you want to get going in this world, you got to figure out how you'd raise money and where you'd put it, and usually that boils down to the people and what they're up to and how you interact with them and what the relationship quality is like.
Well, there you have it, ladies and gentlemen. In this episode of Preferred Return, we have walked through exactly what it takes to use technology to own your edge. And it turns out it's really pretty simple, but you need somebody to help you figure it out. That's what we're here for. Anyway, I do want to thank you a great deal, Cale, for having joined me today. But also, hey, thanks for joining Altvia. We're tremendously lucky to have you. I'm lucky to call you my friend and to get to work with you, as well as learn from you. And thanks again for joining us. We're so grateful.
No doubt. All right. Thanks for having me, man. Cheers.